The market seems to be entering a new phase. You've got anticipated Fed easing, volatility tied to seasonal weakness, and of course the upcoming election. I know Defiance has recently launched several new single stock ETFs. Where do these single stock ETFs fit in this kind of environment?
Yeah, so I think when you have volatility and you have levered ETFs, these become tradable products that allow you to get amplified exposure to a particular name or sector that you're looking at. So in our case, there's just been this massive growth in demand and volume flowing into chip stocks and crypto, although I didn't like that zero that Eric just showed me. I think it's going to turn around in October and November. And so an example of a launch that we had is a 1.75 levered MicroStrategy ETF. And that's off of the idea that, crypto is essentially booming. There's been so much demand, billions of dollars flowing into the digital asset class, and you have a stock like MicroStrategy, which is a huge holder of crypto. So, we kind of, along those lines, launched another series of semiconductor ETFs as well, Supermicrocomputer and Broadcom, to, ease that demand or provide, food for that demand, I should say.
Remember back in the day when they were trying to break the sound barrier with the airplane?
No.
Okay, yeah, it was, I'm old.
I'm sorry.
Okay, Defiance broke the volatility barrier with MSTX.
Yes.
160% volatility. To put that into perspective, the S&P is like 10 to 13. Okay, so we're talking like, really, you better hang on. And I think that's the idea. This idea of packaging adrenaline, it sells. And you're a firm who started as a theme issuer, went into this, and MSTX is an instant hit. It's trading over $50 million a day, which is hard right off the bat.
Yeah.
Who's buying it? Who's trading it? What's the action like?
So if you run a chart of a MicroStrategy stock versus any crypto ETF, Bitcoin itself, Ethereum itself, levered crypto ETFs, over time, historically, obviously not a predictor of the future, it has absolutely crushed it to the tune of 2 or 3x. So anyone who is bullish on crypto and is looking to lever that up is going to trade this ETF, and that's exactly who's using it.
Can we talk about the mechanics of the portfolio a little bit? Just explain how exactly you get that leverage, that exposure. So it seems like it's mostly swaps based.
Yeah.
You work with banks to get those swaps. How does that actually work?
Yeah, so most levered ETFs and inverse ETFs work this way. You get the majority of your exposure through total return swaps, and you're facing a counterparty like a bank. And then, you can kind of fill in the holes and make it more efficient and cost efficient by using things like options and underlying equities. Some use futures, but in our case, yeah, we're pretty much using swap and options for exposure.
And so is there a certain level of leverage where the banks wouldn't be able to get you that full swap exposure?
Yeah, well, as you know, since the derivatives rule passed, most new launches have to come in at or under 2x. I know there's creative ways that people, have found to get around things like that, but, essentially the ETFs have to pass a VAR test, so up to 2 beta is usually what we see. And you see how the filings have varied. A lot of ETF issuers are coming out with like weeklies at 1.5, some at 1.75. ETFs have adjusted their leverage points up and down. I know what you're going to ask me.
So Tuttle is also
Matt Tuttle.
Yeah,
yes.
Matt Tuttle deals in this area as well. You filed to adjust this to 2x.
Yes.
Matt Tuttle had a 2x one file that I think is going to be approved pretty soon.
Yes.
I feel, and there's other ones that have been filed recently, we're calling it the hot sauce arms race.
Yeah.
There is a just race to sort of get the most volatile stuff out there. Is 2x, like, is there a limit where the SEC is like, I'm sorry, the volatility is just too much. Even though it's 2x, it's too much.
So it's 2x, right? And you have to essentially pass a VAR test and provide the information to the SEC. And I don't want to comment about, kind of what they approve and don't approve, but all I can say is that Defiance is the only current listed premier levered MicroStrategy ETF in the marketplace. And so I think that, with ETF products, as we hear feedback from investors and customers, if we can move leverage points up or down based on demand, we'll be able to do so. But as far as I can tell, we're the only game in town.
How big or small is this universe of potential single stock ETFs and leveraged ones at that? I mean, at some point, you're going to run out of companies that investors hyperfixate on.
Right, and that's a great question. I think at first it was this test, and NVIDIA was probably arguably the most popular one. Willow Granite Shares has that one. Billions of dollars had flown into that, and then I think because we've seen that interest and talked to traders, they want more, and we're listening to them and trying to come out with the different products that are interesting. And I think super microcomputer, Broadcom, those are two of the hottest names this year being traded. And Eli Lilly will be a little bit less volatile, one of the most traded stocks in the market, you know, the Zepbound story. And so we'll keep trying to come up with single names that people want to trade and want that additional beta exposure to.
I want to compare what we're talking about, you know, quibbling over 1.75 to 2 times with Europe. Europe, you know, all bets are off. There's a 3 times long MicroStrategy ETP in Europe. The ticker is LMI3. But it's interesting. You take a look at the long-term performance over the past year. We've used this stat a lot over the past few weeks. That ETP is down 89%, even though MicroStrategy itself is up 81%. Of course, that has to do with volatility drag. And this is a long way of asking, how certain are you that traders are using these properly? Because, of course, issuers such as yourself go to great lengths to explain this is not a long-term product, but I mean, how can you ensure that people are actually using these responsibly?
I think we try to get as much education out there. It's the disclaimers all over every one of these products, whether it's, you know, us or our competitors. We're saying, you know, these are daily levered ETFs. You should think about your trade every single day. You can keep it on for a longer period of time, but each day you should have conviction on the direction of the underlying index and also the underlying volatility. So trend is your friend with these ETFs. Range-bound volatility is no good, right? So they'll do really well in trending markets, and, you know, kind of buyer beware and be cautious about your rebalance on these ETFs. But I would like to point out also that, you know, press release just went out actually, but our MicroStrategy ETF will soon also be a 2X product. So we filed to up that leverage point.
The race to break the volatility barrier once again. No, it's interesting. I've always found that a lot of this is logical if you think that the core of the portfolio has been taken over by index funds. People kind of marry an index fund and they set it for 30 years. They're looking for a little excitement. And I feel like that's where the hot sauce has really blown up as a legitimate category. Is your firm, did you see that also? You're out there talking to advisors and you're like, we just can't compete in the core. We'll do this, like, we'll try to compete for that little slice where you want to do speculative investing or trading.
Yeah, absolutely. And I love the word hot sauce because that's what it is, right? You have a portion of your portfolio that you're willing to take some risk on. You're willing to try different types of things, whether it's alternative ETFs, thematic plays, or levered ETFs that you have so much conviction on. And I would argue that, like, hot sauce right now is getting allocated to crypto, right? And then so why not MicroStrategy? But yeah, absolutely, we're playing for that. I mean, it would be impossible for us to think that we can come out with you know, an IVV or VOO and win that race. I mean, so we have to do something else, and I think the demand is very much here for these products.